Before I break down my M1 Finance portfolio, let me give a big shout out to all our new subscribers. We just hit 125 subs in the first month with this channel. I just want to say thank you to everyone who's liked, commented, and subscribed. It's really given me a lot of motivation to keep going with this channel, and I just personally just want to say thank you because it means a lot to me and I really appreciate it. So with all that being said, let me give you a rundown of the M1 Finance portfolio as it sits today. It's July 24th, 2019, and we're just sitting at $895.45 for today. So far, we've gained about $9.57. If you click here, you can see your gains and your earned dividends. So we've earned 0.77 cents in dividends so far. So that's our first dividend money so far. We've got a couple monthly paying dividend ETFs. So as this number over here increases, so should this number with as far as dividends go. The market could go up or down, but we're trying to get our dividend income as much as possible to hit our passive income goal of $500 before the end of 2019. So my goal with this channel is to document all my sources of income, and my plan is to hit $500 a month before the end of 2019. Our first month was last month, and we were able to do $53.13 from YouTube. So as we grow these investment accounts and these other YouTube channels, and hopefully grow other aspects such as websites, blogs, and affiliate income, we're going to try and get to that $500 a month mark before 2019, and I hope to document it all here on this channel. So as you can see, with that being said, we're at a 2.08% return, and if you're new, you can see what we've invested in here. So to break it down, I've allocated my portfolio into 7 different ETFs, and I've weighted them accordingly. So with this account, one of my main goals was to get that monthly income up, so I've put a lot of my weight into these first two, which is SPHD and DIA. They both pay monthly dividends, and the first one pays a 4% dividend, the second one pays a 2% dividend. Between the two, it's a good average out between growth and dividend value, so I decided to weight heavily into these. You can see here I also have the Vanguard Growth Fund weighted at 15%. I have Vanguard's Dividend Appreciation Fund at 15%. I have Invesco's QQQ Power Shares Trust Fund at 10%. And I have the VYM Vanguard High Dividend ETF at 10% and Vanguard Total Stock Market Index at 5%. In doing so, we have a lot of really good diversification. We own thousands and thousands of stocks through these 7 different ETFs, and it just helps keep things simple. Personally, when you're starting off investing, I think you're much better off just going with some good high quality ETFs that have been known to return 8 to 12% on average over the last 20 years. It's just a lot smarter to do something like that instead of trying to pick individual stocks, especially if you're new to the stock market and you don't exactly know how it works and what makes companies go up and down in value. If you're very limited in terms of business knowledge, this is definitely the way to go. And you should go with just a broad index fund ETF with a low cost that covers the entire market. Because on average, our markets in the US tend to average about 8 to 12%. So if you can just get into some good quality ETFs, that's the best bet in terms of long-term passive income and growth towards becoming a millionaire in the future. I used to try and bet on single stocks, and while I did good on some, I did terrible on others. And I've learned over the years that it usually is just better off to have a set and forget mentality when it comes to investing. That's why I've picked 7 high quality ETFs with very low fees. And my philosophy is to just dollar cost average in by investing over time. And with that, I expect to get anywhere from 8 to 12% on my portfolio every single year. In doing so with this strategy, I feel way more at peace. If the entire market is to tank, that doesn't really affect me because I have a very long time span. I'm looking 30, 40 years on the horizon. If the market tanks, that's actually good for me because I have more time to buy shares as they go down and hopefully ride the trend back up into the future. And if the stocks do keep going up, that's okay too. I've got my account set up where I invest $10 a day regardless. As the stock market does go down, I do plan on increasing this and buying more shares when possible. You really don't want to try and time things because nobody has a crystal ball and nobody can see what the market's going to do today, tomorrow, or the next day. So it's much better off in terms of sanity and peace of mind to just dollar cost average in. It's known in the investment world to be one of the safest strategies to long-term growth, and you're probably your best bet in terms of hitting $1 million in your lifetime. It's been a little bit over a month and we haven't really changed this portfolio at all, so I've got one more fund that I want to add that I've been doing a lot of research on. You can go here and click in. So this company is stock ticker O. It's called the Realty Income Corporation. One of the reasons I really like this one is that it's another monthly paying dividend share, and it's got a pretty good dividend on it. It's at 3.91%. and it's got over a 21, almost 22 billion market cap. It's sitting at $69.30 for today. It's down about 30 cents for the day. If we click here on the 5-year chart, you can see there's all those monthly dividends. Right now, each share pays about a 23 cents dividend every single month. If you pick up one share of this for $69.30, every single month you're going to get paid a 23-cent dividend. I've done a lot of research on this company over the past couple weeks, and I've got a good feeling about adding it to our portfolio. You can see here that on average, the compound average annual total return since 1994 is 16.4%. They've had 588 consecutive monthly dividends that they've paid, and on average, there's a 4.6% compound annualized dividend growth since 1994. which equals 87 consecutive quarterly increases. So if we go over here to their top 20 tenants, you can see exactly who their main client base is. They rent buildings to Walgreens, 7-Elevens, FedEx, Dollar General, LA Fitness, Dollar Tree, AMC Theaters, Walmart's, Lifetime Fitness, Circle K, BJ's Wholesale Clubs, Treasury Wine Estates, CVS, Kroger, Home Depot. The list goes on and on. This company has been very well known for their high performance in the market, and I just think it's a good one to add to our portfolio. So I'm going to go to M1 Finance, click over here to our account, and we're going to click on Edit, and I'm going to add them to this account. So let's click on O. There's O Realty, add to basket, add. And so now we got to figure out what percentage we want to make this in our pie. So I'm trying to figure out which way we want to head with this. And I was thinking I was going to take some of this SPHD, since it's such a high portion of our account, and give it to this Realty Income Corporation, because they both have good high quality dividends, and it just gives us another factor of diversification for this account. So I'm going to click Save, Confirm, and boom, just like that, tomorrow, or when the next time we have our cash ready to invest, we're going to get this Realty Income Corporation added to our pie. Thank you so much for watching. Don't forget to like, comment, subscribe.